This conference will now be recorded.
Okay, afternoon, everybody. This is Greg Morton. It is Sunday, April 4th, 2022. This is the weekend Canslim Growth Stock Investors Update from the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As standard disclaimer, this is for educational purposes only, not recommending stocks or securities to buy or sell. All investing has substantial risk of big losses, so we want to learn first and only then invest. In plain English, you are responsible for writing your own rules. You're responsible for following your written rules. You're responsible for doing post-analysis on your trades that you made based on your rules, and you are responsible for tweaking your rules based on your post-analysis. So today, we'll look at the M factor. We'll talk about what we did see this week, constructive or destructive action. We'll look at some charts, stocks behaving, setting up, some growth areas to watch. Quick slide on the Canslim fundraiser, which is next Saturday, which is stock reviews for all the money goes to Ukraine relief. So I'll show you the schedule and how to sign up for that if you want to attend. There'll be a Zoom presentation and it will be recorded. And then I'll talk about our upcoming educational monthly meeting. So as always, the M is the most important letter in Canslim. We always want to diagnose, interpret. We do not want to predict the market direction. We look at three things: the action of leading stocks, which the breakouts and everything since the follow-through day are holding up. Looking at actions of stocks owned, kind of went from slim pickings to picking up, and I'm still seeing that. And market pulse, distribution day count, price and volume on the indexes, as well as the coloring book. So 3 weeks ago, we had follow-through days on all three indexes: NASDAQ, S&P 500, and the Dow. That was sort of unexpected. We're in a Fed tightening, rate increase, and tightening cycle. We're in the middle of this war in Ukraine, yet we had follow-through days where the S&P 500 was up 2.24%. The Dow was up 1.35%. Those were the third follow-through days since the bear market started. They were on day 15 of the rally on these two indexes. And then the NASDAQ, that day was up 3.77%, but it was only day 2 of its rally. So that did not count as a follow-through day. But then that Friday, NASDAQ had its follow-through day, also number 3 for it, on day 4 of the rally. And it was up 2.0% on that follow-through day. So that week, all the MMTS indicators flipped to green, the window of opportunity opened, and IBD went to confirmed uptrend. So what did this past week bring, which was the second full week after the week we had all the follow-through days? So let's get out of here, go to Market Smith first in our index charts. Market Smith's been screwy today and down some, so I think it wiped a lot of the markups off my index charts, so hopefully those will come up. But here's the NASDAQ daily. So this week you can see the 5 days. We had some selling, but these 2 days were lower volume than the nice day on Tuesday. Moving average lines, the 10 is above the 21, is above the 50. They're still all above the 200, but we're seeing things come back. The NASDAQ, the low of each day has been trending and held above the 21 day for, I believe it's met the 10-day requirement under the power trend rules. And I think the 21 has to be above the 50-day for 5 days, and the 50-day has to turn up. So Monday, all that could hit at the close if we have a decent day on Monday. So the power trend could turn back on Monday if I'm applying the rules right. So RS line flattened out a little bit. You know, the market paused a little bit after these 4 strong up days, and pretty good constructive action since then for the most part. Nothing unusual there. It's all sort of normal. S&P 500, 10's above the 21's above the 50, 10's also back above the 200. Again, you had those 4 strong run-up days coming off the bottom back here. 50's trying to turn back up. Looks like maybe it did already. So that's looking okay. Of course, the RS line is flat because it compares it to itself. NYSE back above the 200 and 10 over the 21 over the 50. So again, it's just constructive, not perfect yet. we want everything to get back above the 200. Dow tried to poke back above the 200, ran into resistance, but still 10s over 21s over 50. Russell, 10s over 21 over 50, still has a long way to go to the 200. RS line's trying to pick up, so a little weaker looking action here. The RS line looks best on the NASDAQ for sure, so maybe we'll see some growth coming back in. If we look at my coloring book, which is my market direction tracking tool, couple things to notice. We did get distribution days on just the S&P 500 on the Dow, but this is the first distribution day since the follow-through days back here on the 16th. And then there's the NASDAQ follow-through day on that Friday that I was talking about. What was really constructive this week, we already had subsequent follow-through day on the NASDAQ. We also had one on the S&P 500. And then this week, we got the second subsequent follow-through day. So that's why it's 3.2, because it's the second subsequent follow-through day. So that happened on both the NASDAQ and the S&P 500. So that is very constructive. Mike Webster and Justin Nielsen have both said that their research has shown that the follow-through days where you have some subsequent follow-through days within the 25-day window, they start counting back on the rally day. I start counting on the follow-through day. But the subsequent follow-through days within that 25-day trading window are constructive. So it's nice, that was a good thing that might have gone under a lot of people's radars. So that was good. Still, my buying, selling day count, it's in a tug of war, it flipped to green. Then it got tied, and now we have 7 buying days, 8 selling days within my 25-day window, which is really O'Neill's 25-day window, starting at the orange dot. Some of these stocks that are breaking out, these are only Canslim stocks that are breaking out. Some of these are making progress, and the majority of them are still holding up. So that is constructive. If we look at the group teaching portfolio, we continue to work our way toward back, hopefully break even soon for the year and make some progress if this uptrend can continue, down 2.71% for the year, 74% invested on a cash basis with no margin used yet. And we only have one ETF that's slightly in the red, so everything's sort of looking okay there, and I'll upload that or link the updated one on the Greenville East Side IBD meetup site. So let's go back over here. So we looked at all those were good. A couple keynotes. We didn't have any distribution days right after the follow-through day, and now we just have one on the S&P 500 and the Dow, and we're in the second full week of trading after the follow-through day weeks. Breakouts, early entries are making progress. We're seeing more and more setups in growth stocks, not perfect, not completed, but we're building constructive looking bases. Moving average lines are being reconquered and put in the rearview mirror. And we had the second subsequent follow-through day on the NASDAQ and the S&P 500, which I showed you in the coloring book. Also, the power outage turned off. I forgot to mention that this week, the 21 back above the 50. And as I said, we're close to the power trend signal turning back on. MMTS are all still green, window of opportunities open, IBD's in confirmed uptrend. Matt Caruso's high-low indicator on the NASDAQ is green. So I think it's still appropriate time for Canslim investors to be increasing exposure. Game time's still on, but we do not want to plunge. We want to be constructive. We want to be very picky in the stocks that make our top tier watch list. They need to earn the right to be there, to be considered to be bought. And only as we're making progress do we increase more exposure. So we are much more the tortoise than the hare, but we have our eyes wide open. So we do remember not all follow-through days work. Normal Canslim plan is you must buy something. You've got to increase exposure on a follow-through day, even if no Canslim stops breaking out. Just use an index fund on whichever index had the follow-through day is a simple way to do it. Want to go slow, try 1, 2, maybe 3 partial positions. If you're more experienced, you might can bump that use of 3, and then only increase as they make progress. And do remember the best merchandise comes out the earliest, but strong uptrends, tradable rallies will last for 8 to 10 weeks. So you've got a period of strength and opportunity in there. Still have a lot of headline risk. We'll get the Fed minutes this week on Wednesday. So it's interesting. I just realized that every 3 weeks, the Fed has a chance to impact the market because they meet every 6 weeks. And then 3 weeks after they meet, the Fed minutes come out. And those can both be market moving events. So this week, this Wednesday will be 3 weeks from the last Fed meeting. So we'll get the minutes and then we'll have another meeting in 3 weeks from Wednesday. So EPS Q1 season started April 1st. We're going to see that ramping up. So we got to look for viable gap ups. Still have headline risk from the war situation. If we get a ceasefire or withdrawal, I think that will give the markets a nice boost. If they get to the leadership of Ukraine and kill some government officials, could go the other way. So we just study it. And as always, Canslim works better when the NASDAQ is trending above an uptrending 50-day SMA line, works best when the NASDAQ's trending above an uptrending 21-day EMA line. So we're getting the best here lately, and the power trend turning on. If it does, we'll further confirm that. So we'll look at some charts. Go back to Market Smith real quick. I just threw some in here, kind of in 2 areas where I was seeing strength among growth stocks. Go to weekly charts. So here's Vertex. These have been on IBD Live. They've been in the paper. They should be on your radar. Slightly extended here on the weekly chart, but sort of had a bottom pattern and then a proper bottoming base where it was viable off of that. Right now it's 8% from the pivot, so it's extended. Look on the daily chart. It's only 4% from the pivot, so it's picking up the pattern a little bit different on the daily chart. Regeneron, mentioned this in our meetings in several weekends, so it has broken out, still in the buy zone, showing accumulation. AZN, this one's extended also 7% from the pivot, but it's just showing one that works with some volume coming in, as it's going through the pivot. Shockwave, this one's still setting up, maybe it pauses here, forms a handle or a cheat area or a tightening up volatility contraction pattern as Mark Minervini talks about, maybe give you an early entry, draw a slope and trend line across that. Good Canslim stock, look, triple digit earnings and sales growth for 2 quarters. That's just really, really nice. Pfizer, trying to set up, that looks, well, it's only 26% deep, looks a little V-shaped, but again, you got to go through and study these. Dexcom, maybe the diabetes stocks are going to set up again. Dexcom, Tandem, and Pod, so we'll keep an eye on those. Not really a symmetrical base yet, so that one needs some work, but those were all medical stocks that we just looked at, so that's the area to keep an eye on. And then in the technology area, we're seeing a couple. SciTime Corporation, good earnings and sales, looks like it's working on setting up a base. Broadcom, keeping the old Avongo ticker, AVGO, setting up. That's a stage 3 cup. I don't really want any stage 3 bases, particularly in this squirrely market. Yeah, stage 3 on both of them. But I'm just pointing out that some technology is setting up. Industry groups moving up, back up to 60. So moving toward that top 40. And then Synopsys, very high industry group, but it is setting up a stage 1 cup with decent earnings and sales, got some good fund ownership, liquid, 340 million a day. So there's some things out there. You got to decide what checks the most boxes for you, whether you're going to enter it, and do some digging. Go to the website, see what they do, see who their customers are, see what their future looks like. Look at an investor presentation for the ones that you really like. Do that little extra bit of work. All right, and then so next Saturday, there's a fundraiser for Ukraine put on by your Canslim community. So this is IBD meetup leaders and market leaders. You have like 14 different speakers. It's going to be very short, although it's still a 4-hour program. Here's the schedule. It'll be on Zoom. It'll be recorded. So there's the tentative schedule with the times. It's all Pacific time. And here's how you register. You send it to PayPal to Ajit, $20 minimum. You can pay more. Again, everything. No speakers are paid, nothing. All the money goes to Ukraine relief. And then just follow his instructions there. I'll put this ad out on Twitter, and I'll also email it out to my meetup group, so you'll get additional copies of that. And then our monthly meeting. So we last met on March 16th, which was Fed meeting results day and was the S&P 500 and Dow follow-through days. So here were the things we covered. Mostly we talked about the RS line, and it's important. And then we kind of looked down the road and talked about some cousin stocks in the EV space. So we'll be following up on that topic, briefly on each meeting to see how those stocks are doing that we talked about. And then our next meeting will be Tuesday, April 12th. You sign up at the Stockyard Meetup site. The meetings are $12. That includes the recording and the slide deck and any links that I send out to you. If you don't sign up for the meeting and come back and order it later, you're making me do more work. So those are $15. So just sign up for the meeting. And then first timers, if you sign up for your first meeting, I send you a courtesy copy of the March meeting recording, slide deck, and all the related links. So sort of a 2-for-1 deal, I guess, if you're a first timer. April agenda, biggest educational topic will be what's waiting back in on a follow through day look like? How fast do you go and still be the tortoise? What do you use to get back in? So we'll kind of look at that from some macro and micro views. So that'll be a new educational topic. I really haven't done that one before in detail. And then our prior meetings, I can send you a list of these. If you don't have a set of written sell rules, you just really need to stop and do that. And I spent 3 months teaching how to do that. January, February, and March, you will have your own set of written sell rules if you will walk through that and do what you're taught in there. And then other ones, if you don't have a good weekend routine, I updated and presented that in detail in September of last year, followed up on it in October. And then the other ones, we've done prior bear markets, how they unfolded, rally days, follow through days. So there's a lot of educational material that I put in a form where I can still send it out. So if you're interested in that, you can shoot me an email at this email address, greenvilleibd meetup or mu@aol.com, and I'll send you the list and how you order. Meetup sites, just go to meetup.com and search for the Greenville Eastside Group and the Stockyard Meetup site. And then you can go to my YouTube page, which where you're watching this, and there's a lot of educational videos on there. So you can take advantage of those too. So that's it. Hope you guys have a great weekend routine with earnings season and everything else coming up. Should be another interesting week. Overall, we certainly have been more constructive since than destructive. We're more accumulation dominant tape than distribution dominant tape. So it's still good as of right now. And we'll see what this week brings because I have no way to predict. So that's it. I'm out of here. Y'all have a good one.